very tight labour market, which gives them it affords them to be very hawkish. But what is interesting here is they are seeing a further monetary tightening here. But the subtle thing is, most people ask in this situation, you know, what did you do today? Why did you do what you did today? What are you going to do next is actually more important.
Well, it's always next. Like this, as soon as a monetary policy pronouncement is made, the question is what comes next. So today's hike, the 25 basis point hike, of course, was expected across the board. And frankly, I think that it's fairly broadly believed that this isn't going to be enough. There'll be at least another 25 basis point hike to 3.85. And then much depends on the numbers that continue to come out of Australia, and also perhaps what the Federal Reserve decides to do in terms of its meeting not only this month, but in May and into mid-year. It'll be critical to see what happens there. There are some signs that the economy in Australia is beginning to respond to higher interest rates. We are seeing that, you know, the comment made just a moment ago, inflation is down. It's still high. It's still above 7%, but it has come down by about a percentage point. The unemployment rate has gone up a bit. Of course, I think the RBA would be happier if there was a bit higher unemployment rate, some loosening in the labor market. I think one of the big one of the big factors that I think everyone will be watching is what happens with when mortgage rates start ticking up in response to higher interest rates.
That was the question I was coming to. It's one of the biggest things that they have to grapple with, and we did see some signs of life for the Aussie housing market as well. But you know, that could just be seasonal. But Stephen, I mean, this is the whole challenge. How do you balance things and, you know, not create a very hard landing? The same sort of conundrum facing the Federal Reserve.
Well, that is the risk, and I think that's why the RBA has taken these 25 basis point hikes at a time. You know, they've been very, they were late getting into the game, but once they got into the game, been fairly steady in terms of the pace of rate hikes without taking too big of a step at each point. I think the key will be to watch both consumer spending and the labor market. Those are the two key points. If the labor market can ease up and spending slows, particularly again in relation to perhaps to rate resetting on mortgage rates, I think that'll be a key factor. Not that the housing market will weaken considerably, but simply that as variable rates reset, there'll be a bit less cash available for spending, and that should slow down the pace of inflation as expectations may kick in for less spending after that.
Stephen, the RBA is saying that it will do what is necessary to bring inflation to target, something we've been hearing from the Fed over and over again. Is there a sense if we're close to peak, and what is peak at this point in time?
I still think, yeah, I do think that we're close to a peak. I think when we look at certainly the supply factors that are leading in inflation, they've eased quite a bit. Bit of an uptick in energy prices in the last week because of expectations of the China market, the China economy turning around. But I think we can get through that fairly well as we get into the middle of the year, and energy supplies may kick in again. So it's really a matter of managing the demand side. And I do think as we get to mid-year and as we continue to see a couple of more rate hikes, perhaps, I think that will bring the demand side a little bit into control, if you will, and will set up the central banks to hit their terminal rates by sometime in the third quarter, I would guess.